People tend to project in straight lines when real growth is exponential. What we've seen in the BESS market, I see forecasts of in 2030, 600, 800 gigawatt hours. Well, guess what? We'll probably reach that in 2 years, not 5 years.
You've been on many sort of site visits, seeing parts of the world?
Well, the only traveling I did recently was to Las Vegas for the Fast Markets conference.
How was that?
Oh, it was pretty awesome. My first time in Vegas. But to be honest, I didn't really like the experience. I think it's a different Vegas from what it used to be. I hear complaints that it's all rent-seeking behavior there right now, and it's really, really true. Everything costs so much, and they try to charge you for everything.
Really? Yeah. Okay.
Yeah, and the hotel, every single hotel, they charge a resort fee of something like 45 or 55 USD a night extra on top of what the hotel already charges.
Oh God!
It must be private equity owned or something.
Mate, you know who doesn't do that? You should come with us to the Africa Down Under conference here in Perth. I think it's the 3rd to the 5th of September. Mate, pay to put on a banger. There's look, to be honest, there's probably more gold opportunities, but Africa, a great producer of lithium. We're going to be there.
Yeah.
And
you run a transition fund as well, YJ, and there's plenty of transition critical minerals in the great continent of Africa.
I'll tell you what, we could probably fix you up with a discounted ticket just for you, YJ, if you agree to come with us.
And then you're going to drop me in Congo and forget all about me, right?
Hey, great lithium projects in Congo, mate. Let's not forget about that.
See, mate, YJ's coming to ADU, Africa Down Under, 3rd to 5th of September. Get your tickets. They're in the show notes. You and I are going to be there.
We are, mate.
Very excited for this conference. Big thanks to Paydirt for putting this on. Mate, I think this is going to be the year that Africa Down Under is its best year. It's best year ever after growing massively.
Couldn't have said it better myself, mate. Get your tickets.
Join us and YJ so he doesn't get dropped in the Congo. Thank you so much, YJ, for joining us on short notice. We're trying desperately to understand or wrap our heads around this anti-involution policy, which has come out of China. It's made a big impact on the lithium markets already. This is a kind of a big thing that we're trying to wrap our heads around. And we thought we'd speak to you all about what's going on here from the policy front in China, how that's affecting the mines and the critical mineral supply, and why lithium is maybe quite exposed to this emerging thematic and policy shift in China. And for the listeners who don't know, this is YJ Lee, who runs the Arcane, or who's a fund manager for Arcane Capital, and your fund performance is going through the roof, mate. You were year to date up like 56%. It's a phenomenal result. So congratulations on your tremendous performance so far. We're glad to have your insights to help us learn about this.
Yeah, hi guys. Yeah, great to be back on your show. It's been 10 months, I think, since our last episode, and boy, so much has changed in the lithium market. I think in the previous episode we were talking about the bottom probably arriving, and I think we were a little bit early on that, but right now I believe we are past that. I think the bottom was in June this year. And when spodumene was about $600 a ton, and carbonate was $8,000, and now prices are about 50% higher than that. So
spodumene's above $1,000 a ton, like in the space of 2 months. It's truly remarkable. It's amazing. Yeah.
Yeah. I mean, at that point in time, it didn't look realistic to me, which was we had a price where 2/3, even up to 2/3 of the producers in the world don't make money. And that is, to me, not sustainable. For an industry that's growing easily 25, 30+% per year, doesn't make sense that more than half the suppliers don't make money. So I think that probably marked the bottom. And now, like you rightly point out, with the policies in China coming out a bit more in support of rational market-driven dynamics, that probably signals the bottom of the market.
How do you think about this anti-involution? It's like the buzzword of the month at the moment, YJ. Is it something sort of dominating your thinking and the conversations you're having as well?
No, I wouldn't say it's dominating, but this anti-involution thing, let's take a step back and understand how this whole thing comes about. So China, is a huge market, and it is super competitive. It is not the case that like they portray in the West, it's all centrally planned, it's all government controlled. Not at all. What happens actually is that there's a central government layer, yes, which sets the country policies, and then there are individual provinces which kind of act like your states in the US, right? Who have their own concerns, their own financing, their own employment numbers to look out for, their own taxes to cover, and therefore their incentives might be different from that of the national government. So national government sets the broad country policies. The local governments have to manage their local employment, local economies, and then down to the private sector, which then has many companies that are fighting out in the market, also fighting out at the same time against some of the state-owned enterprises. So it's an open marketplace. So I was kind of describing the story of competition in China, right? Now that was the backdrop. And what usually happens is that the government sees a clear direction forward. For example, 10, 20 years ago, government says batteries. We are going to be number one in the world in lithium and batteries. And they set the long-term vision for that. Before that, it was shipbuilding. Before that, it was steel, So what happens is that the government has set this long-term vision. Then the states, the provinces execute this in each of their provinces to the best of their ability, and incentivize companies to start up. Usually, they incentivize this via tax policies and the usual economic incentives. Yeah, some subsidies, some tax policies, etc. And that allows many companies to start up and then start competing with each other. And China is a huge place, so many provinces. And when this happens, what usually happens is that at the start of any major policy, maybe 50 to 100 companies get started up competing in this space. And then by virtue of their competition, the strong survive, the weak die out. Typical Darwinian marketplace, yeah? So, by doing this, they gain the skills, they gain the expertise, they gain the market shares, and the winners eventually become the strong companies of the future, right? But the process of doing this creates huge competition between the companies in each province and between the companies at the national level. That's why we are seeing today over 50 EV companies in China. The numbers have dwindled over the last few years, yes, but then this is competition. To the extent that they are all trying to survive and by driving prices down, that has caused what we have a joke, everything that Chinese do, that Chinese produce, they turn it into the price of cabbage. We call it 白菜价, right? So it goes from steel to ships to now EVs, right? They're so cheap. You can have an EV, an Wuling for what, $5,000, right? So, but this process of bringing prices down, competing all the way, leads to loss-making situations, boom and bust cycles over decades. And now we are at the bottom of one of these cycles, which is for lithium, and which means that nobody makes money, but some players are going to survive and come out the stronger for it. And that's how it is in the typical Chinese way of doing things.
Yeah, and that process, I mean, the competition bit kind of makes sense, but one of the realities of the competitive nature is that there are these price wars, which might actually in some ways be a little bit anti-competitive. The focus on this supply side policy, anti-involution, as I understand it, it's actually looking to refrain from price wars by reducing supply across industries, think steel, solar, logistics, even medical devices. And as a result of that, there's potentially a mentality or a cultural shift towards higher kind of profitability of the businesses, as opposed to the highly competitive overcapacity and price wars. Is that like a fair characterization of your interpretation or of the policy?
Yeah, but what yes, they are trying to do this, but what I think that this may not be as successful as we think it's going to be, because this is pure market economics. Price wars, making short-term losses for long-term gain is nothing new. Every economy goes through this. We've seen price wars happen in Western countries, in industries in the West as well. So it does not mean that this is native to China. In fact, what happened with the solar industry, like you mentioned, a few years ago during the Green New Deal periods, the solar companies were making so much money. They're all cashed up. The big ones have billions of yuan in the bank. They can wait this out. They can make short-term losses. They're going to lose half that stash, but they're going to come out with capacities double, treble what they were 5 years ago. So, and that drives down their costs in the longer term. So I don't see this anti-involution policy immediately succeeding, because it is difficult. You are fighting market pressures. What I mean to say is that it is natural for many companies in an industry to compete on prices, drive prices even below costs for the short term, so that to win the long-term game. And no government policy can stamp this out immediately. To the extent that, yes, they might be able to target specific players that run at a loss so that they can subsidize their operations in other ways, i.e. CATL. That could be successful. But industry-wide, I don't think it will work for the solar industry, and I don't think it will work for the lithium industry.
YJ, I'm curious to just hear a couple of thoughts on why this has all kind of come about, because there is a bit of a notion that this came about from a cultural type push, and it's the government responding to that, and that sort of dynamic through the major cities, and the cost of property rising so much, and salaries being so competitive and these sorts of things. Do you see that? Is that how you've sort of inferred this involution or anti-involution policy setting coming about?
It's a little bit too early to make firm judgments on this policy, I think. Where it's coming from, yes, to some extent, they do see that this competition has gotten a little bit out of hand, and it's causing kind of how do I say, it's a bit of a downer in terms of the national mentality, when everybody fights it out so much that nobody makes any money and everybody suffers for it. It's not a great place to be. So I think they are trying to change the culture a little bit towards more healthy, to set the tone for a more healthy expectation of future market conditions. But I don't know whether that's going to work.
Yeah. And a lot of the people we've sort of spoken with have made the comparison to the supply side reform 1.0, sort of call it, in the 2015-16 period. How do you sort of compare and contrast the differences now? Is that a comparison you kind of jump at, or do you think we're in a kind of unique situation here?
I mean, history rhymes, right? But never repeats itself. Back then, it was mostly competition at the large SOE level. Right now, China has become very, very much market private. Most of the market power, a lot of market power has shifted over to the private companies, especially in the lithium space, should I say. And I think it's harder to, actually make changes the way they want, what they want to change, because it's not a SOE that you have direct control into.
These are private businesses, right? So yeah, if you're trying to have a supply side policy that is targeting the private businesses, one mechanism to have some input there from the government level would presumably be through this licensing mechanism, and this is the part of the news flow that has really kind of rippled through the lithium equities in the last couple of weeks, and it's in relation to China's government revising the mineral resources law and the legislation, which outlines that mine registrations and approvals are now down to the Ministry of Natural Resources. And that also means that the local governments can no longer license operations without authorization from the ministry. We saw this a little bit ripple through with notably the Jiangxi Cattle's mine, the lepidolite mine there. I think it also goes by the name 414 as well.
Yep.
How did you interpret that series of events as it ties into this this policy as well?
I see it in terms of economic incentive. So when lithium prices were super high and lepidolite started coming onto the scene in 21, 22, then the government had no issue with these mines coming online through whichever loopholes. A kaolin granite mine coming online to produce lepidolite, right? As maybe the byproduct in a way, the lepidolite being a byproduct, but it actually was the main economic product of the mine. Therefore, feeding into the supply chains and bringing down the lithium prices so that the battery guys and the EV guys can survive and dominate the industry for the future. Yes, that's in line with the national policy, and therefore it's allowed. Now, prices have dropped so much that other things become more important, right? Pollution, for example, lepidolite is highly pollutive, toxic even, to refine. And then the amount of ore you have to move is simply ridiculous to produce a ton of lithium carbonate from that Jiangxi mine, the Jianxiawo mine that CATL runs. It's a very, very low grade mine. The grade is 0.28%. And it's lepidolite. You need to basically, at such low grades, you need to move 350 tons of ore to produce a single ton of LC. Makes no sense, right? And if you want to scale this up, some people say the capacity of this mine is 100,000 tons per year. I don't think it's that at the moment, but that is the longer aim, I think. Do the math. You need to move 35 million tons of ore to produce that amount of LC before refining losses. Right?
It's remarkable. Hey?
So maybe you need to produce 50. So it's crazy. I don't think they have a 35 million ton operation there.
Yeah.
And the amount of pollution that would create would be insane. So now I think other things become more important. Cheap raw materials can be bought in the open market from Africa, from all over the world. Then the local pollution issues start coming up.
This one mine, the Jiangxi mine, like Cattle's Jiangxi mine, that was operating under a kaolin license. Like it was, the categorization was a kaolin mine, but they were obviously not producing very much kaolin or any, I think. So it was the wrong characterization. So the thing that they've kind of been like picked up on under this new policy or enforcement of policy is to get that licensing like to be appropriate. There's a different royalty rate between the kaolin mines and a lepidolite mine, as I understand as well. So it's kind of like a higher like a higher cost structure to change it. And then within that same province, there's 6 or 8 other mines, smaller scale, which have to get their own licensing changed by September when they're set to lapse. Is that all accurate? And do you see risk to them being shut down as well, or like what's your interpretation of that?
To be honest, I don't think anybody knows for sure. It's too vague at the moment. Nobody really knows unless you're like super insider.
Gotcha. So these are the rumors that are swirling around in the lithium WhatsApp group chats, though.
Yeah, but I mean, let's look at the bigger picture, right? We don't need to get into too much of the nitty-gritty. It doesn't matter what the slightly different royalties for different minerals, etc. there. Let's look at the bigger picture. CATL's mine gets taken out for minimally 3 months, right? Maybe even 6 months. That takes maybe about 20, 30, at least 15 to 30 kilotons of LC out of the market. If the other mines get taken out for a couple of months as well, then that's that much supply out of the market. But the big picture is that the lithium market last year was 1.2 million tons LC. This year is probably going to be 1.5 to 1.6. I think 1.6. Other people, more conservative, think 1.5. But the bottom line is that the demand is growing 25 to 33% this year. Every 3 months that the market, every 3 months, the demand is growing at maybe 6% or 7%, right? So think of it this way: every 3 months, the world needs to bring a new 尖下窝, a new CATL lepidolite mine to the market to meet the incremental demand growth. Is that going to happen?
I suppose when you pave it like that, getting in the nitty gritty of the smaller supply stuff is like less like a less pertinent part of the equation when you think of the supply demand. And you've been like constant on this point, YJ, for a long time, that the like consensus is massively underestimating demand here. And I'm keen to just like peel out why consensus is so wrong.
Sometimes they are looking at the narrative. The story out there is that low prices means that demand is not catching up to supply. Therefore, demand must be slow. But that's how the news agencies tend to portray this picture. But the fact is that, go back to economics, right? Basic economics and your demand curve, price, quantity. The lower the price, the larger the quantity demanded. Translate it into real world terms, the cheaper your car, the more people switch to this cheaper model, right? And now we see with low battery prices, cars, EVs getting cheaper than petrol vehicles, getting cheaper than diesel vehicles. Heavy use vehicles are switching over very, very quickly because the ROI on these electric vehicles is so much higher. Now, one of the things that I've been looking at very, very closely, which I think analysts or consensus hasn't really focused on, is electric trucks. This is huge. This is a huge market. In China, they sell about, last year, the heavy electric trucks in China sold about 75,000 units. This year, they are on track for 160,000 units, over 100% growth year on year. Each of these heavy trucks has a battery 10 times the size of a passenger car. And these trucks are going everywhere, in mining, in hauling. You even see China trialing autonomous trucking in China already. So I think that the demand for lithium is a lot higher now that prices are low, which I think is in line with economic theory. I don't understand why analysts have car demand growing in the teens this year. Makes no sense.
So demand is going to grow gangbusters, right? What does that sort of make you think?
If demand grows gangbusters, we know more supply needs to come online, and the supply is going to come online naturally faster from the existing mines that are in production and can expand. And when I think of that, mate, I think of Liontown. Obviously, they revised their ability to produce to 2.8 million tonnes per annum that they're currently like their mining rate is. But we know that can be like 4 million tonnes per annum pretty quickly, which means more tonnes coming from underground, which means more ground support is actually going to be required to enable the more mining coming from underground.
And why not use the best in the business when it comes to ground support? Sandvik Ground Support.
Sandvik Ground Support. They're the only name you need to know when it comes to ground support, mate, because it can come to your mind in a jiffy like that, because there's distribution hubs all over the world. They've got a team that cares about it, and they provide tailored service, great feedback, great people to order from, great people to ensure that the product is on spec and it is delivering the results they need. Great person in Derek Hurd.
100%, mate. And just like the lithium market growing gangbusters, these guys are improving year after year after year, mate. Ground support is not something that just needs to be sort of left in the corner. It gets better by the day.
You know what the tagline is, mate? Keeping people safe.
Keeping people safe. Call Sandvik Ground Support. One of the pushbacks that a lot of people have, and I'm really curious to hear your thoughts on, YJ, is that a lot of this has been subsidy-led, government incentives, tax credits, these sorts of things. And maybe we've seen some of them sort of peel off. How do you kind of respond to the narrative that it's only been propped up by governments thus far?
We've seen subsidies fall off in many economies, and doesn't affect the rate of change of EV adoption. Goes up towards China is now at 50% and subsidies have been falling off year on year.
And the BESS component, the stationary storage, like the growth there has been, I think it's sort of safe to say it's been astounding and underrated as well. And I remember when we spoke a number of months ago, you were pretty bullish on this part of the market. I'd love to sort of get your reflections on how that's grown versus what you had thought back then and where you see that kind of evolving.
Well, actually, I kind of raised my best forecasts, I think, from 10 months ago. I didn't go back to check the previous numbers, but I think they're higher now. I think by 2030, we reach a 1.5 terawatt hour market from 200, just over 200 gigawatt hours last year. I think this year we are slightly over 300. That's kind of in line with Roll Motion's estimate as well, I think. And why this is happening is because two things. One, batteries have become so cheap that the payback period on most grid level BESS is now 5 to 7 years, and that's great economics, right? And in China, commercial BESS has now payback periods of 1 to 2 years. I'm not kidding you. I learned this from the fast markets analyst. Credit to him, Chinese guy. After his presentation at the Fast Markets conference, I had a chat with him, and he told me this. What's happening in China is that for the commercial guys, they are actually, when I say commercial BESS, I mean smaller scale, privately owned BESS systems, right?
Yep.
And what they do is that they charge midday when, of course, prices are pretty much negative, and they discharge into the evening peak, which is the usual BESS operation, right? But then they also charge midnight and discharge early morning peak. And that means that they use their asset twice a day, not just once. And that drives the yield of the asset, and therefore the payback period becomes 1 to 2 years. With that kind of economics, people sure as hell are putting in tons of BESS into the market wherever they can. I've not met a single BESS manufacturer that says that they are short on demand.
Yeah.
That's fascinating. And this part of the market is one where we've seen like a huge discrepancy with the people we've sort of spoken with and what their growth assumptions are versus consensus broker. Like a sort of factor of 2x. Like some of the feedback we've gotten is that they think this part of the market is twice as big as what a heap of brokers out on the street have written it up to be. Is that the sort of like thinking you've got as well, that the consensus in Wall Street or whoever you sort of think about there is way below where it's actually at?
People are projecting like, as opposed to observing actual installation rates, they're projecting the wrong numbers.
Yeah, of course. I mean, it's the typical thing, right? People tend to project in straight lines when real growth is exponential. What we've seen in the BESS market, I see forecasts of in 2030, 600, 800 gigawatt hours. Well, guess what? We'll probably reach that in 2 years, not 5 years. And the same forecast error happens in solar. I mean, go back to that's the other part of the BESS equation that I forgot to mention. Solar, go back to the world energy outlook for the last 10 years, all right? Their forecasts are always off by a factor of about 3. 3 years ago, they said that last year's solar installations were going to be 200 gigawatts. No, it was 600. And to the extent that they're all forecasting linearly, the real growth has been vertical. And now that drives the entire BESS market. So much solar is being put in the world today. A lot of markets experience negative electricity pricing during the midday. You cannot install new solar without pairing them with batteries anymore. And just in time, battery prices have come down so much that solar plus batteries now are even cheaper on a kilowatt hour basis than coal or gas. So it all makes sense now.
And if we touch on the chemistry that's really dominating in that part of the market, LFP, is there any competition in your mind there?
No competition there. LFP is cheaper. It's got more charge cycles than NMC. Great batteries don't really need the incremental increase in energy density that NMC delivers. You don't need a battery to be able to provide a faster acceleration for your car because great batteries don't move. So yeah, LFPs are the chemistry of choice for BESS.
While we're on the chemistry piece, YJ, I'd love to get your observations on like in the lead up to CATL's like IPO, the potential any observations on like CATL's discourse to the market talking up sodium ion, and then sort of subsequent and maybe ensuring that there was an oversupply of production in the market via their own mine, which if you just take it on face value, the mine is uneconomic. However, CATL is making money on having lithium price be low, and their margin is incremental there. Do you see any like are you part of the cohort that thinks that like maybe CATL was being a little bit disingenuous in their in the way that they were talking about sodium ion, and also in their in the supply and margin kind of component of that market?
To be honest, not really. I mean, I don't subscribe to every single conspiracy theory, but
not everyone.
not everyone. Some of them maybe. But I mean, to the extent that I think CATL did run the mine to influence lithium prices globally, I think that's true.
Sure.
But the sodium-ion battery side, I mean, I'll give them. To be honest, if I were CATL, I would probably develop sodium-ion batteries as well, because you're a large battery company. You can never say 5 years or 10 years down the road which chemistry is going to become dominant. You have to play everything, and you have the resources to develop everything and see what works, right? And if our view of the lithium market is right, that BESS, electric trucks, cars, the demand grows so quickly that lithium cannot, that there's not enough lithium in 2020, even 2026 onwards to meet demand to 2030, then something has to come in and pick up the slack. And the only something out there right now really is sodium. Yeah, so I think there could be a use case for sodium to pick up some of the demand that cannot be met via lithium batteries. For example, BESS. Yes, a sodium battery setup will require about 3 times the land footprint compared to LFPs. But if you're putting BESS out in the desert, yeah, I mean, you can use 3 times the space, it doesn't matter.
So if we focus on the ramifications, like we sort of touched on, the price response has been pretty quick in the scheme of things. But I think it's fair to say it's not in the interest of the Chinese government to see lithium prices run away to levels they got to sort of last time. So how do you think about that dynamic? I know they'd already sort of put a bit of sort of influence in the amount of speculation that could take place with regard to futures pricing and these sorts of things. Do you think there's a big role that they're sort of playing behind the scenes in where the lithium price sort of settles?
Honestly, no. I don't think they are trying to guide the lithium government on a national government level basis. I don't think they're trying to guide the price of lithium per se. It's a very, very small market. And to be honest, if you look at lithium as a percentage of costs these days, given the huge scale of manufacturing, the raw material isn't yes, it's some part of the bill of materials, but it's no longer as large as it used to be. Now, manufacturing scale has kind of driven production costs down in a very big way. So even if lithium prices were to double from where they are today, go from 12,000 to 24,000 per ton LCE, I think the battery market could absorb that. CATL and BYD have no real issues raising prices by a little bit to cover this cost, and then everybody can and then there'll be a healthy and incentive pricing in the market to incentivize new supply to come online. Otherwise, we go into a deficit much quicker than people think.
So if we sort of reflect on that point, the potential supply response, obviously through 22 into 23, we saw a magnificent supply response from an incredible run-up in the price. And this sort of supply came from pockets where people didn't think it might otherwise sort of come, or it came on quicker from parts, say, Africa and Zimbabwe than others thought it would. Are there regions that you think might be able to sort of flick on supply, or existing mines that might expand supply that you're sort of keeping a keen eye on to sort of see that this price level maintains?
Well, we are running out of continents to be surprised from, right? I mean, the only remaining one is Antarctica, isn't it? So,
yeah.
But I mean, look
Wait
at
till we
it.
extract it from the seafloor, mate.
Well, that's nickel, man. People are trying that. I don't know how well that's going to go, but
Well, let's not go there.
But it was a small market. 2022 was a very small lithium market. It was I think if I recall correctly, an 800 kiloton market in total. nothing compared to iron ore, copper, etc. Tiny, tiny metal market. We are still tiny, we're still small, but it's a lot bigger than before. This year, if we are 1.6 million tons, that's double the size. The market size has doubled. It will not be so easy to influence the price either way from here going forward. The larger the market gets, the more supply you have to bring online to the market to crash the price. So in next year, we are probably in a 2 million ton LCE market. You will have, if you bring on an additional 100 kilotons, like what happened from Africa 3 years ago, now you're influencing the market by 5% instead of the 16% that it used to be. And it is not it is not easy to bring 100 kilotons of supply to the market quickly. How they did it in Africa was literally they went to all the outcrops they could see and just started digging. No mine plans, no very, very few approvals, just went in, started digging and go. Same thing happened in Jiangxi. We had school children, unfortunately, the economy incentives were there, go out into, pick up rocks, stuff it into rice sacks, load it into the back of the truck, send it to the refiner. That's what happened. But I don't think it is easy to influence the market in a 2 to 3 million ton market.
I suppose like what we're trying to figure out is, so we've had some supply out of the market. You paint the picture that demand is much higher and growing much faster than most of the market is expecting. A lot of the people who have a more moderate outlook for lithium in the short term, they point to, inventories are still very high, but they're probably not focusing on the fact that inventory days is at a local low because the market's much bigger now. Is the market tight enough in your opinion? Is the market so tight that we're going to see a pretty pronounced move forward and upward in the price in your expectation? Are we at that moment right now? Is this a trend that's going to continue, or are we kind of just going to moderate around $1,000 a ton, a C6?
I think you're exactly right that people are focusing on the wrong inventory numbers. Absolute inventory levels, they matter, but it's the days in usage that really matters. In a market that's growing 30% a year, you need 30% more inventory every single year. So that number has to go up. And you're also right that it's I think it's tightening in the sense that we've not seen rejections of shipments like we saw in the last cycle. So in the 2020 lithium ups, or was it 2020 or 18? In the previous lithium boom and crash, during the crash, shipments were being rejected, right, from Australian producers. We don't see that in this market. So something is going on.
We've
right?
heard that too. There's been no observation of any cargoes, being pushed back or delayed or anything like that, like has been seen.
We must be speaking with the same people, YJ.
Yeah.
Yeah. So I mean, to the extent that and it's very weird. I'm even hearing stories of low grade even lepidolite being refined together or blended into with spodumene. And honestly, I have no idea how the technical process of this would work, because it to my understanding it's kind of different processes. But yeah, I think we've got to a point where people are realizing the market is probably a little bit tighter than they think. I don't want to make any speculation on prices where they go in the short term, because price forecasts, I think, are inevitably wrong. But we just need to step back, take a look at the big picture, think of incentive pricing and whether or not we are there yet. Right now, $1,000 barely covers costs for Western Australian players, some of them. So if you want this supply to continue producing for the next 3 years, it has to be here or higher. Does $1,000 incentivize new, for spodumene, incentivize new supply to come online? Barely. 12,000 LC. Is it enough for a new brine to come online, or new clay or DLE? I don't think so. So we are not there yet.
It's simple when you just think of it in with your outlook, and if you have the same expectations on demand growth that you have. We're pretty reflective of this moment as a result of what could be a substantial policy shift combined with demand and market tightness all at the same time. Like, what do you think? like we and also maybe our listeners should be paying more and more attention to?
Mm, the fact is that supply growth is all baked in. All right. People are developing mines from the same places where they know that there's been a deposit for the last 10, 20 years. So to me, supply is no longer surprising. Demand is where people should spend all their time analyzing and comparing versus forecasts. I think EV adoption is growing even faster than people think. Yes, the US is slow and the US media dominates headlines. Articles keep coming out of the US that say, oh, EV sales are slowing. Makes no sense, right? It's growing, it's accelerating in China, it's accelerating in even, shall we say, less developed economies. They are literally skipping the petrol age. They don't want petrol cars anymore. They are going straight for EVs. BYD is sending their 7,000 car carrier ships everywhere around the world. That ship has gone to those ships. Now they have a fleet. Those ships have gone to Germany. They have gone up north to my neighbor Malaysia. They have come to Singapore, right? So EVs are being exported all around the world from China now. And I think everybody should focus their attention on demand. It's growing so much faster. Just look out for the confirming data.
That's a really interesting perspective, YJ, because the classical capital cycle investor would always sort of be taught to focus on supply, because supply is, in a sense, easier to determine because the speed at which you can turn a mine on takes time, and then you can build your sort of base from there, whereas the demand side needs you, in a sense, to understand human psychology and these sorts of things. But you sort of come at it from the perspective of there's enough confirming data if you look backwards, which people aren't doing, to give you that confidence to look forward across all the sections of the market, whether it's EVs, stationary storage, and sort of see that this is a real sort of trend that's going to continue.
Well, mate, I literally have a degree in economics. And one thing that we actually do say in economics is that demand creates its own supply.
Yeah. Lower prices lead to more demand. The demand.
No, it's not just about lower prices, right? I mean, if it's a very real thing. If humans demand
the reflexivity of the network
then
effects that
people
come
start
from
coming
more and more.
correct. Yeah, it's not that supply creates demand. I mean, if you have a supply of something, you still have to convince people to want it.
Yeah.
And then the more they want it, now then your supply becomes valued. If you have something that is not in demand, then you're never going to get a price for it. But if there's a demand for something, it will change the market to create supply. So demand creates its own supply.
I love that point, YJ. We'd love to give you a bit of an overrated, underrated, quick fire segment if you're open minded and willing to give us your salient views on hopefully I've got like 10 things written down here that I'd love your overrated, underrated.
I think we can add a couple as well.
Yeah,
the couple ideas.
We will. The first one's very easy because we know what your response is. ESS, overrated, underrated.
Not loved enough, but yes.
Massively underrated is the response. Yeah.
It's not overrated, underrated, but it's one or the other. BYD or Tesla as an electric vehicle maker. Have you got a preference?
BYD.
Yeah. Undeveloped Western Australian spodumene projects, overrated or underrated?
Wow. Sorry, broad. That's a broad range, man.
I know. I said undeveloped.
Undeveloped. Nah, not many big deposits left. Mostly overrated. Sorry.
We might have asked you this one last time, but worth getting another take. The future prospects of DLE.
I recently became a little bit more convinced that DLE could work, but at the same time, it is not easy to transplant to other brine fields. Therefore, probably still mostly overrated in most people's minds. I don't think that much DLE supply comes online in the near term.
Brazilian spodumene.
Resilient spodumene?
Brazilian. Brazil.
Oh, Brazilian. Yeah, low cost supply. We'll continue to produce for a long, long time.
Underrated?
Yeah.
Albemarle.
Broad question. Neither overrated nor underrated. It's in balance.
Hong Kong listed lithium producers.
Underrated.
Yeah.
How about investing in Chile for lithium production?
You really want to get into that?
All you have to say is overrated. Consolidation probability of Chinese downstream.
Low.
Yeah.
This one's sort of slightly adjacent, but I know you've covered it in the past. Overrated or underrated silver?
Still underrated.
Beautiful, YJ. I've got none left, but all I've got is just appreciation for your insights and you making the time to give your salient views and analysis. It's refreshing. It's compelling. It's cause for us to evaluate our own assumptions in a market that's clearly growing rapidly. And yeah, congratulations on your awesome performance so far. And we hope you'll come back and join us in the future as the market continues to develop here.
Oh yeah, definitely. Thank you guys again for the opportunity to be on your show. Just happy that now at least we have a bit of a track record to show potential investors, and I hope that this gets our name out there a little bit more. Thank you.
Absolutely. Great to chat again, YJ. Thank you.
Thank you.
Super insights. Makes me reflect a lot. Yeah, big fan of YJ, big fan of our partners which make our production possible. Big thanks to them.
100%. Axis Mineral Services, Sandvik Ground Support, Africa Down Under, and Focus by Market Tech, mate. Oodoroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.